Hey guys, welcome to another episode of Wealth Strategy Secrets. Today we're joined by Logan Freeman. Logan is co-founder and principal of FTW Investments and serves as the Chief Development Officer. Logan has facilitated over 150 million in real estate transactions and has a unique understanding of the needs and wants of sophisticated investors, enabling him to effectively support individuals and organizations along their investment journey. Logan is particularly adept at sourcing off-market properties, with more than 50% of his completed transactions involving off-market properties. Having completed over 125 transactions, Logan has found a reliable process for executing real estate transactions. Logan is an advocate for affordable housing and works closely with many organizations in helping to end homelessness in Kansas City. Understanding how to do well by doing good is Logan's motto and has made it his why for doing business. Logan holds an MBA from the University of Central Missouri, and we're proud to have you on the show, Logan. Welcome aboard.
Dave, thanks for having me. I'm energized, thriving, and focused, and I think we're going to bring a lot of value today.
Awesome. Really looking forward to it. So why don't we kick off? So for folks who aren't familiar, tell us a little bit about your background. And I know you had a bit of a career in football as well. So, tell us where it all began for you and how did you end up in real estate?
Dave, do you know what the capital of Missouri is by chance?
I do not.
Not a lot of people
East
do.
Coaster, I don't. So.
Not a lot of people do, and that's where I grew up. And so it's Jefferson City, Missouri. And you think about Missouri, St. Louis, Kansas City, and maybe Columbia, where the university is. Well, Jeff City is just right there in the middle of the state. And I always kind of liken Jefferson City to back to Carol Dweck's book of the two different mindsets. You've got kind of the fixed mindset, meaning this is how it's always been, and this is how it's always going to be. And then you have the growth mindset, which is, hey, the decisions and the impact that I'm going to have in the world, I can dictate that by the things that I do. And if I delay gratification now, I might have a better future in the future. And so I think that Jeff City's a little bit on the kind of fixed mindset. It's a great place to grow up, but really my eyes weren't really opened until I started visiting cities like Kansas City and meeting people from larger cities when I started to play football. And so my whole life, I really kind of identified as an athlete and grew up, playing football and basketball and baseball. Got the opportunity to play Division II football with a scholarship and had a great career there, and got picked up as an undrafted free agent with the Oakland Raiders. And ultimately I was cut, but I had the opportunity to continue, but I made a decision. I made a decision that I wasn't going to be an athlete anymore. And I think it was kind of internal desire of mine to kind of break out of this, maybe this mold that I had been or I had created for myself, which was just as an athlete. And when I was cut from the NFL, I really felt like this huge burden off my shoulder. I said, okay, this kind of gives me the opportunity to recreate and re-identify myself. And so I did. The 49ers called and said, hey, man, we want you to come out to camp. And I said, no. And I went back to school and finished my master's degree. And this is really where my eyes were open. Not only did I go through a massive physical transformation, I lost 120 pounds in 6 months. So, at the NFL Combine, I was, 335 pounds. And so I had to get a job too, because I didn't have a scholarship anymore. And I didn't have any money because as an undrafted free agent, you don't make any money unless you get a contract and all these things. And so, I had to make a decision. And so I was going to school full time. I was working full time. So I had to have a very disciplined and rigorous schedule. So I'll just walk you through that. I would wake up at 3:30 in the morning, head to the gym, and then I would, go home, eat breakfast, and then I would drive an hour to work. And I always say this is kind of where my transformation happened, because I turned my car to the classroom on wheels. I really started to listen to guys like Zig Ziglar and Jim Rohn and Tony Robbins and Brian Tracy. Yeah. And this was before podcasts were really a big thing, right? I could find John Lee Dumas and Lewis Howes on there, but there wasn't a ton of podcasts out there. And so I had CDs that I was listening to. I'd go make 265 cold calls a day. I'd get told no 264 times out of the day. But I learned what that resilience, what you needed to have in business. And then I'd go to school for 4 hours in the evening. And then on Saturdays, I would spend 12 hours in the library just catching up. And I would say this, I was going to a formal education, but really my education was happening in my Nissan Maxima as I was driving to and from that job. And I started to hear, different themes like, hey, passive income and different income streams, and not just building income, but building wealth. And I was like, I don't even know what that means, And so really started to dive in. What is money, and how is it created, and what's the velocity of it, and how do you get paid in the marketplace? And so that took me down a few other rabbit holes, which was one of them was real estate. So I read Rich Dad Poor Dad, and I learned the cash flow quadrant of being an employee, being self-employed, being a business owner, and being an investor. And so I had all of this kind of theoretical knowledge that I was taking in. But thankfully, I had mentors that were living this out in real life. And so I was able to see it effective at the applied level. And so I was pairing these two things together at once. And I'm so grateful for these men in my life that really helped me. And I'll just say this, I'll just very quickly, after I graduated, my father had really battled with drugs and alcohol his whole life. And when he was moving me out of my apartment, he couldn't walk up the stairs. And my dad's 6'3", 250 pounds, strapping Native American guy, and could dunk a basketball and hit a golf ball 300 yards, and he couldn't walk up the stairs. And I was like, man, something's wrong. And less than 3 weeks later, my dad passed away with complications of liver cirrhosis and having a stroke. And so, holy cow, 6 months of my life, I'm no longer a football player. I've lost 120 pounds. I'm going through this, mental transformation, and I lost my dad all in 6 or 7 months. And so it's just this big period of time. And these mentors said, Logan, this may be the most important decision point in your life, and you need to really think through this. And so they helped me through this process and really said, what are the 4 most important things in your life? And I'm going to give you the first 3. So it's your faith, it's your family, and it's your fitness. And then the last one can be fun. It can be future. It can be food. It can be whatever you want it to be. You can see themes here, F's, Freeman, and then all of the different F's that I have for my life. But I chose future. I really wanted to break out of kind of lower middle class and understand how to really build wealth. And so I moved to Kansas City after burying my dad, and I was a franchise consultant with Jimmy John's. And so I was a corporate employee. I was the youngest franchise consultant they had ever hired. I had 25 stores between Missouri, Kansas, Nebraska, and Arkansas and Iowa. And in 12 months, I rose through the ranks, and I asked my boss, what's next? And he said, dude, you got to put your time in. And so 2 weeks later, I was out. I said, see you later. I joined a startup company with 3 individuals. And in an industry I had no knowledge whatsoever, but I knew the people at that company were going to bring me up. And so I was there for about 3 years, met my wife and the best man at my wedding, really learned how to sell and build relationships, and left that job and took a what I thought was a safe, comfortable W-2 job. 15 months into that job, I was fired. And so I learned that I was unemployable. I had my beautiful wife really said, Logan, this is your time. I'm going to support you. You go do what you want to do. And just by happenstance, I had a kind of a mentor in my life, and a guy that had sold me some single family homes here in Kansas City say, hey man, my head of acquisitions just left, and I just landed a $50 million fund as a client, and I need somebody to come in and find product for them. And I said, well, I just got fired, so this is a perfect time. And so I joined up with this fund, and we were buying single family homes in 2017 and 2018 for cash. 7 days, we would buy them, renovate them, rent them out. And then I did a big refinance over 265 homes. We were the 6th group in the country to go through the CoreVest portfolio refinance. So basically put a big non-recourse debt option on this portfolio and then return the capital to the investors, and it's still cash flowed. I had to know how that worked. And so I sat down with those fund sponsors. They kind of gave me some tips and said, Logan, this was a syndication. And I was like, I had the bug. I said, that's exactly what I wanted to do. But what didn't I have? I didn't have knowledge. I didn't have experience. I didn't have the track record. And so I moved my license to a commercial and multifamily brokerage because I didn't want to do it on single family homes. I wanted to do it on multifamily and commercial. And so I started brokering those types of products to 1031 exchange buyers, all on the buy side. And so I learned the acquisition process for that asset class. And, that really helped me kind of understand the whole transaction process and what to look for and how to find these off-market deals. And so then I started to buy some properties myself, quickly ran out of capital and experience. And so this was back in 2019. I said, okay, I think it's time for me to find some business partners. And so I really took stock of, my strengths, my own weaknesses, and then I overlaid that with the transaction process in the commercial real estate world. And I found business partners that could supplement my skills. And that was extremely important. And so back in 2019, we started to buy our first multifamily properties. We were very bullish on neighborhood retail shopping centers at the time. But we all know what happened in March of 2020, COVID-19, global pandemic, lockdowns, dropped all the retail shopping centers and repivoted into multifamily, and really made some big swings and hit some doubles and triples, I would say, when everybody else was kind of on the sidelines. And that allowed us to build a portfolio of about 1,000 multifamily units in about 8 months. It was a crazy time. We had 3 guys and an admin. It was wild. It was crazy trying to get debt for these projects. I mean, but we made it happen. In the last 15 to 16 months, what we've been doing is building in the operational team to continue to scale. We've added another 300 or 400 multifamily units. We've added some office assets, some retail assets. We're in the mobile home community space now as well. And we're continuing to grow, but now our team is 24 people here in Kansas City. And so what we're doing now is just trying to position ourselves as an asset manager and a private equity company that sees opportunities, not just in multifamily, but different asset classes. And when we see that pricing arbitrage, being able to actually go and execute quickly. And so that's kind of what we've been up to. And that's my transition into the space, Dave.
Awesome. Awesome. Thanks for sharing that with the audience, Logan.
Absolutely.
It sounds like, quite a transformation that you made, a huge light bulb moment, right, that went on. And there's a few key themes that I'd like to just go back a little bit
Absolutely.
to your background that's just really interesting. And we talk a lot about mindset, right? And sometimes people overplay it or whatever, but I can't stress enough the importance about, mindset. And, you had the courage to start to challenge conventional wisdom thinking, and start to think outside of the box. And it sounds as if, once you started, getting some mentors, getting some additional resources through reading and podcasts and things like that, you start to realize that, wow, there's just a different way to think than the 90% around us all, right, that are doing things a certain way. And then you committed really hard to changing that, that's massive. I was in the Marine Corps, and it sounds like your training was on par with that for sure, if not
Absolutely.
harder.
Yeah.
So I love that commitment that you made, to overcome that challenge. And then with that, creates more confidence, right? And it creates greater capability, which you then transitioned into your current business, which is really outstanding. But it all starts with that mindset and just challenging the conventional wisdom. And it's always, I'm sure you can resonate with this. It's always frustrating when we have some of these great opportunities, to present to investors, but there's certain people, even certain family and friends or people you've known for a long time, and they don't take the time to understand it because of, previous beliefs they've had, whether that, be from how they were raised, or, from what their, mainstream media and the people that they're surrounded by. But if you can just start with opening up your mind a little bit, it's amazing how many, new opportunities can present themselves.
I read a couple books that I'd like to point people to. And one of them that really helped me understand how value is created and how wealth is created was MJ DeMarco's book, Millionaire's Fast Lane. And it's a little bit of a catchy, kind of crazy title, but this guy just takes on the mainstream media and the dogma that is kind of peddled through all of the different channels and breaks it down. And it was the most illuminating book that I have ever read. It's a big, thick book. I listened to it and I read it, but I thought that it was a really game changer for me. And then, my mom spent a lot of time with me growing up. I struggled with ADD and obsessive compulsive disorder. And she took me to kind of a psychologist or a psychiatrist, I guess it would have been, and was kind of some cutting edge technology to, put all these electrodes on my head and say, hey, I'm going to throw stimuli at you, and it's your job to be able to navigate that and keep your internal levels at a certain level through your own mind. And I was like, what are we doing here? And I was like 12 or 13 years old at the time. And I think that really kind of influenced my belief that, the mind is the most powerful tool that we have if it's trained in the right way. And then going through the whole process of being cut from the NFL and losing my father, I had then got to use some of those tools. And I had dove back into a great book called Emotional Intelligence 2.0. I believe it's from the guys at Vital Smarts, or Daniel Goleman is the author. And, your IQ is pretty fixed, right? I mean, you get gifted with kind of an IQ, but your emotional quotient, or your EQ, is something you can improve upon. And so that book really breaks it down. You take a little bit of a quiz, then you go through the different trainings, and then you can take the quiz again and see how you're doing. And so I really focused on that. And that allowed me to look at myself objectively, the decisions I was making, and try to stay out of the emotions of it and be more objective. And that was an incredible tool for me as well. And that all kind of played into the mindset piece. And then I obviously read a lot of Tony Robbins and Darren Hardy that really helped me and kind of set the stage to say, hey, this is not going to be easy. You are going to be going against the grain, the road less traveled, as Robert Frost wrote way back when. And I think that set the stage for me to say, I know this is going to be difficult. I know there's going to be a lot of pushback, but if I can get the other, the surrounding people in my life that are thinking that same way, then I'm going to be able to pull myself back up out of this. And so I had to really break out of kind of some old social circles that I was kind of operating in, had to get around people thinking the same, doing the actual things that I was reading about. And that really helped me on the mindset side of the business and personally.
Yeah, no, absolutely. That's really solid. I think people don't realize how powerful books are, and that is really the source of where you're going to get some of these, innovative ideas, and to really challenge, traditional thinking. We all read books in college, but, to me, frankly, they were a little bit boring, right? But when you can pick up some of these books, I've read Millionaire Fastlane, I've read a couple of these that you've talked about. And if you think about it, it's almost a download of someone's life. And you can literally read it, in a week and get so much knowledge from that. It's super powerful. So Logan, with this mindset transformation and everything that you took into getting into real estate and everything, can you tell us a little bit about your personal wealth strategy?
Absolutely. I'd love to. When I got my first job when I was 14 years old, and, not a lot of people hire 14-year-olds. I had to have my mom sign off, my school sign off. And so I started at a catering business, washing dishes. And on the weekends, I would throw hay in hay fields, believe it or not. I would just walk around and put hay out of a field on a trailer, and then I'd have to go unload it at people's houses and barns and things. And so, really started to make some money early on. And, I was in a personal finance class at the time. Dave Ramsey was my high school personal finance coach, through that class. And so I thought I needed to go start a Roth IRA. And so I did, and I'm not knocking any of those things. I think saving is fine. But at the end of the day, I really started to try to understand, okay, if I'm, going to do this for 65 years and I have to, put away a certain amount of money, when I'm 65, I'm going to be old. There's guys that are living lives that I would like to live, and they're 30, they're 35, they're 20, they're 25. And I said, so how do they do it? Well, for me, it really kind of came down to one of two routes, right? So one, you can have a new novel, creative idea. That's not me. I don't have that type of skill set and knowledge base. And so to me, it was, okay, well then what did everybody else do? And so I ran across a quote. I don't know who said it. Maybe it was Rockefeller or Carnegie or somebody, but it said, 99% of the world's millionaires were built through real estate. I don't even know if that's true, but I didn't care. I said, okay, well, that's fantastic. Well, how? And so then I started to realize that real estate can provide income, depreciation, equity buildup, appreciation, and you can use leverage to do it. And that paired really well with, MJ DeMarco's book of the 5 Commandments of Business. You need to have control over it, high barrier of entry, There needs to be a need for it. You need to be able to step away from your time, and you need to be able to scale it. And so I basically said, okay, well, I think that the wealth building formula of real estate compared with the business formula of the 5 commandments of business, I can do both at the same time. I can build a business in the real estate space while building wealth at the same time. And I don't know there's that many different businesses that will allow you to do that. And so for me, it was okay. Make sure that I understand personal finance. Let's get out of debt. Even with all the scholarships I had, I still had collegiate debt that I needed to take care of. So I got rid of all my debt. Then I said, okay, let me put just a budget together, right? Let me understand my income and expenses. Okay, my income is not going to be able to go up at the rate that I want to in this role. So what do I need to go do to find that? Okay, great. Let me go find something. And really that for me was a business owner and self-employed kind of individual at first. And so then I was like, all right, I understand that. That's fantastic. So then how do you actually scale and actually step away with your time? And that's when the business ownership and investor piece really started to come into play. I needed to understand, okay, there's been some great studies out there that if you're a solopreneur, you're a solo business owner, you're probably going to be capped out somewhere between $500,000 and $600,000 on your income. That's just average. Okay. There's probably a lot more doing way more and a lot less doing a lot less, but there's, at the end of the day, it's hard to scale past that without, putting people around you. And so for me, I was like, okay, what are my strengths? Well, communication, relationship building. So let me see if I can attract talent and people in my life that do things better than I do in certain aspects, and we can compare those together and then build something to be able to scale it. And so for me now is looking at not just real estate as an investment, but other asset types as well, and saying, what do I understand? What's my circle of competency? What do I have access to? And what can I actually go execute on? So those kind of 4 components. And for me, I've said, after meeting with all these guys that are, 30, 40 years ahead of me, have family offices and they're doing all the crazy tech stuff. That's phenomenal. But guess what? They all have a fundamental foundation of some sort of cash flow. And a lot of that's rooted in real estate. So my personal wealth strategy right now is to really focus in on cash flow, on creating a business that is, not up and down all the time, but is pretty steady, and create a really strong foundation, which will then, the cash flow from that will allow us to go be more risky with our capital in other ventures that we see opportunities in. Probably ancillary businesses that fuel the real estate business at first, but then maybe getting outside of that. And that kind of really came true for me whenever I started meeting with these family offices saying, we're doing all these different things now, but where we got our start was in apartments, in office buildings, and industrial properties. And so I'm really just saying, okay, there's a lot of shiny objects out there. I'm just going to get really, really good at the fundamentals and the foundation right now. And I'm going to be in this business for a long time. I'm a young guy. I've got a long time ahead of me, hopefully. And, so let me just be patient, be quick, but don't hurry is my mentality. I want to be patient, and that's hard for a hard charging, type A person. But at the end of the day, like we were talking about in the green room, it's not, it's a lot easier to get your head over your skis and fall down than it is just to make calculated, mitigate risks and protect your downside. And that way you never have to try to get back up. Yes, we're all going to get knocked down, but I mean, big, 2008 type of situations where you just get wiped out. And so I can learn from all those different experiences. So I would say personal wealth strategy right now is just getting really good at one thing, allowing that to create cash flow, which we then can go get riskier in different ventures.
Yeah, no, that's really well said. I think it's interesting too, because I think, almost all of us in this space have read Kiyosaki, and was really one of the most, transformational, moments for us to really understand how money works. Right. And then also, as you talked about the cash flow quadrant, which was really illuminating to me from a tax, standpoint.
Yes.
But one thing I found is that, at the time when I think I read that when it just came out in 2000, but these were very conceptual books, right? So it seemed kind of theoretical, like, okay,
Sure.
Real estate is the asset class versus stocks, bonds, and mutual funds. Okay, let me to explore that. But in terms of building wealth, the way the wealthy are doing, I had many mistakes, over the years. I mean, I followed the financial planner advice. I put my kids' money in, 529 plans.
Sure.
I put money in the 401ks and all of that kind of stuff and made all that stuff. But, the lessons that you're talking about, it's awesome that, you learned them so quickly. And it's one of the reasons, and I know we share the same philosophy. What's so empowering is to take these lessons that took us so many years to learn and start to help other people, experience that sooner. Because the only regrets, I mean, I don't have any regrets in life, but the only regret like in this space is, I wish I knew these things earlier, right? Because you could be even further along the path.
Yeah.
So, and I think there's this other concept as well, Logan, that's that really ties to this whole space, right? And it's really, it's kind of, how you define wealth, but it's also really about freedom, and not only freedom of money, but freedom of purpose, freedom of relationship, freedom of time, all of these things. And it's cool that you were able to really understand, what your strengths were and your unique ability, and then double down on those strengths, partner with other people and be in that space. Because ultimately, there's a lot of people who have a lot of money or high income, but they're not happy, right?
That's
They're
right.
not fulfilled. So when you're following those things that you're talking about, I hope listeners really take that to heart is, it's also all about fulfillment and,
Absolutely.
having mission. And it sounds like you're on an awesome trajectory for that. What if everything you thought you knew about investing was wrong? Would you like to create a wealth strategy like the top 1% have? And get exclusive access to top private equity deals that provide downside protection, tax efficiency, predictable cash flow, and have a lucrative upside? Discover how with the Pantheon Advantage and join our investor club today at pantheoninvest.com.
I would say, Dave, that the biggest thing for me was knowledge is not power. Knowledge is potential power. Knowledge plus action is power. And so early on in my career, I just took a shotgun approach and I said, okay, I don't know what I don't know, and I don't know anything. So let me just go take it's just massive action. And that worked well. As a solopreneur, okay? But when you start to get more strategic and you start to have people that rely on you, you have to take not just massive action, but massive strategic action. And so then it was, let me get really in depth in these business books like EOS with Traction and, all these different business books that really helped me say, okay, how do you scale a business? How do you actually think about this in regards to going from, 1 million in revenue to 3 million to 5 million to 25 million to 100 million, And so I had to really start understanding that, just taking a ton of action was not the right route. I needed to be more strategic. One of my wife's top talents is strategic. And that's why she is very good at what she does. And so she kind of looked at my life and she goes, you just need to focus. You're not afraid. You don't care what people think, but you need to take all of that energy and focus it into one area that is clear and concise and compelling. And that was really important for me. So I think early on, taking massive action is phenomenal. It's kind of the Grant Cardone approach. That's great. That's just one component. But then you need to get strategic in understanding what your competitive advantage is and what you can actually go execute on. And so the shiny object syndrome is what really kills most businesses, in my opinion. They have this core thing that they do really well, and then they start to see other people kind of iterate on it, and they're like, oh my gosh, I got to go do that as well. And then they get out of their core competency and then they fail. And then their core business actually starts to struggle because they've taken their energy away from that. And so I think being clear, being disciplined, and being intentional about your goals and what you're trying to accomplish, and staying away from the shiny object syndrome, especially in today's environment where literally new asset classes are being created and new investment opportunities are being created out of thin air, is extremely important. And so that's really, really important for me. I think that you said it best. All these ideas are complete at the theoretical level, but they're very hard to be applied at the effective level. And so, thankfully I saw men and women, living this out on a regular basis, not just in their businesses, but in their faiths, in their families, in their fitness. And that's one component that I would say the last 24 months I have been hyper focused on is my own fitness. I'm down 34 pounds. I sleep better now. I've got more energy, and that is so important as a business owner and just as a person individually, to keep your mental health as well very, very strong. And so all of those different things, I think that if you're going to go down this route of being a business owner or an investor, you have to have that those skills and really strong, because it's not easy. I think at the conference that we were both at, we heard the best thing I heard was this business is a knife fight every single day. And I've used that over and over ever since and experienced that. But if you're willing to step into that, and if you're willing to embrace that, then the actual, the result can be incredible. But not many people are, and that's okay. I had a conversation with a guy yesterday, high performer, top performer in his business. He's an engineer, and he's like, man, I'm kind of capped out. I can't really do more, and I'm thinking about building a business around it. And I said, well, what's important to you? He said, well, I want to be able to go pick my kids up. I want to have, life freedom. I'm like, dude, you don't need to be a business owner. Just enjoy what you are enjoying and go invest your money. And that was kind of a light bulb moment for him. I think that was important. I chose this path because I want to be challenged, because I want to build something incredible that I can pass on, create legacy, the Freeman family name in Kansas City. That's the route that I've chosen. But if I choose that route and then I don't embrace the struggle, then what am I doing? I have to know it's going to be hard. If it was easy, everybody would be doing it, right, Dave?
Yeah, absolutely. Now that's so well said. And I think also from that health standpoint, it's just so important to, appreciate how, the magnitude of health, right? You could have all the wealth in the world, but if you didn't have your health, where would you be?
Right.
And, and then the importance of goal setting with that, like I literally have a goal to live to 116. So by setting that goal, you might say it's crazy, but what it does is, today, this week, I have longevity and vitality goals that, I need to do a certain amount of workouts. I need to eat certain ways, and I'm constantly thinking about that. So, so another really key pillar, and that is one of the key pillars in our overall wealth strategy.
Absolutely.
So Logan, let's transition a little bit into FTW, kind of what you're doing today. Tell us a little bit more about, kind of what you're seeing in the market. And that is a unique market as well in Kansas City. I think, most of our community, we're investing in some of the typical areas, Southeast, Southwest, where we see high job and population growth. But tell us a little bit more about your market, what asset classes you're focusing on, and what your buy box looks like.
Yeah, well, just from a kind of a macroeconomic standpoint first, if you track property price indexes, I think Green Street has one of the best ones out there. And if you can go back and look at kind of last 24 months, 26 months, I guess, April of 2020, we really started to see a massive decline in commercial real estate prices. That kind of continued all the way until September. And then in September and October, we really started this hockey stick growth. And now we have leveled out on the property price index, but we've leveled out, at a level that is much higher than pre-pandemic levels. And so that is one thing that's really interesting to track. The other piece that I track on a regular basis is the funds flow rate, meaning what is the new mortgage debt originated as a percentage of GDP. This is another really great metric to kind of keep your eyes on to see kind of where cap rates are going. Everybody always says, interest rates and cap rates are directly correlated. They're not. I mean, there is some correlation, but there's plenty of times in history in the last 10 to 15 years where they have gone in opposite directions. And so what's a better marker in my mind is the percentage of new mortgage debt as a percentage of GDP. And so one thing that we've seen is that is at an all-time high as well. And so I'll get a new reading after the second quarter on that front, because it's not easy to track on a monthly basis per se. It takes a lot of analysis. But at the end of the day, from April to September is when we bought the bulk of our multifamily properties. We bought 1,000 doors at an average of $45,000 a unit here in Kansas City. And so I've only been able to add 200 to 300 new kind of properties on the multifamily side. And so then the question becomes, okay, well, what do you start to focus on? Well, I mean, we go back into what have we done? What's our experience? And, like I mentioned earlier, previous to multifamily, we're really bullish on neighborhood retail shopping centers. And now I have 26 months worth of data to be able to really analyze, how did these shopping centers perform? And, what I'm seeing is the weak businesses were weeded out. They failed. They couldn't make their rent. And so the property owner said, okay, well, I'm going to put more essential businesses in these neighborhood retail shopping centers. So you got to think about, kind of e-commerce resistant, service-based oriented businesses. It's your hardware stores. It's the restaurants, certain restaurants. It's banks. It's financial institutions. It's the physical therapy, the chiropractor. All these types of things that are hard to do online, so to speak. And so, I think that we'll continue to purchase more and more neighborhood retail shopping centers this year. The other piece that I'll say from a macroeconomic standpoint is, when Class C multifamily properties start to have a stabilized yield on cost, the same as new development, it really kind of starts to make sense if you can develop, in a way that also makes sense to look at new development options instead of paying the same price for an asset that's not located as well as maybe a new product would be, and it's not new construction. But then, you have labor and construction costs that are, 20% higher than, they were last year. So that's another, challenge there. But we've definitely been more open to looking at development opportunities. I'm still extremely bullish on anything affordable housing. So that's why you'll see us enter into the mobile home community space and manufactured housing space, because there's literally a shrinking supply of that product. And so I think that's a great asset to be in. That's kind of where our core competencies are right now, making some contrarian bets here in the Midwest on suburban office. Picking these things up for $65 to $75 per square foot. You can't develop these things for less than $225 a square foot. And we've seen a flight to quality in the office space. So maybe a business had 2 or 3 locations in Kansas City. They're consolidating into one location, the best located one, the one that has the most amenities and is well parked and it's close to their employees. So that's kind of suburban office. And so we're purchasing some of those assets as well right now. So that's kind of our focus, and just kind of really resetting kind of the expectations with us to say, look, I think that there will be another buying opportunity, just like we saw in April of 2020 in the near future. I'm not going to pull the crystal ball out and tell you when that's going to be, but I want to be ready. I want to have capital ready. I want to have the operations ready, and I want to have the relationships ready to be able to execute on those deals quickly. Because the thing is, if you think about April of 2020, everybody was kind of saying, okay, I'm going to wait for pricing. I'm going to wait for pricing. I'm going to wait for pricing. Well, people were transacting in that down run and when it was at the bottom. And if you were waiting, then you really missed out, then you bought on the upswing potentially. And so I think that you have to have these markers that you're watching. You have to have relationships and you have to be ready and you have to be able to think contrarian. Whenever, like Sam Zell says, when everybody's looking left, you got to be willing to go right. And, so that's kind of our thesis right now in regards to the asset types that we're focused on. Why do we love the Midwest? Well, we're here, and I think that's the main component. I have relationships here. I know the markets extremely well. We're in Missouri, Kansas, Nebraska, and Iowa. I'd love to get into Oklahoma and Oklahoma and Arkansas as well. So just really understanding those markets, and I can operate. And that's I think the biggest component right now is feeling competent and confident that we can operate in the markets that we're in. I mean, I know that we've had 17% year over year rent increase on multifamily. Kansas City, just to put in perspective, 7.2%. So we're always going to be behind the gateway markets or maybe the Sun Belt or the Southeast, right? So we're not going to see the major appreciation on rents that maybe other markets will. So it's always about cash flow in these markets. And yes, you can force appreciation, but we're not going to see the natural appreciation that a lot of these other markets do because we don't have the population growth. We don't have the job growth that these other markets do. But that's okay if you price the deals the right way on the front end because we're buying for cash flow and for actual forced appreciation through cosmetic upgrades and an operational efficiency. And so I think that from our standpoint, is back to that circle of competency. It's where we're located. It's what we know. I love those other markets. Texas, I see Texas and Georgia and Florida and the Carolinas, all the time, Arizona as well, but I don't have the same competitive advantage or strategic knowledge that I do here in the Midwest. And so until we have partners that operate the same way we do here in the Midwest in those markets, I think we're going to be very hesitant to kind of enter into those. And I think our investors also have holdings in those other markets, but they're looking at the Midwest as maybe a more of a cash flow and safe play. And so that's kind of the reason that we like Midwest. Kansas City's definitely started to get on people's radars, which has caused a lot of larger checks to come into Kansas City, lots of new development to come into Kansas City, people chasing yield, and that has caused some competition, but nothing like Arizona or Texas or Florida. And so we still see opportunities here in the Midwest. And then there's cities and states that are kind of behind Kansas City, right? And so Kansas City always is marked as 10 years behind Denver. Des Moines might be 5 years behind Kansas City. Omaha and Lincoln they're never going to get to Kansas City size, but they still have some of those same demand drivers: agriculture, finance, they have transportation, farms, all these different pieces of the puzzle that make it easy for us to understand what those demographics and psychographics are in those markets. And we can capitalize on maybe a larger growth trend in some of those smaller markets right now here in the Midwest that might catch up to Kansas City at some point.
Yeah, no, that's a good point. We're always partnering with operators, right, who just, have a great niche, in a particular market. And, because when you're playing this game, it's all about diversifying. It's actually focus and then diversification. So you're focusing on the asset class and your investment thesis, and then you get into, how can we diversify better? And, I think you pointed out some really good points about, why you would want to focus on a particular market, particular operator, when you can get that inside advantage, identifying off-market opportunities, cash flow, and it's just a different profile, right? And not all deals are created the same, right? They're different, and having a good mix of those is important.
Absolutely.
Logan, what would you say if you could give just one piece of advice to our listeners about accelerating their own wealth trajectory? What would it be?
Yeah. Well, sometimes your greatest breakdowns can be breakthroughs in disguise. So if you're going through something right now, just realize that if you come out the other end, you can come out stronger, but it's going to take work. I read 750 books, Dave. I spent 4 hours every single day on myself, previous to being married and having 2 kids and all that stuff. I still spend 1 hour a day on myself, but you got to be selfish. And, there's a lot of times when I'm talking to a business owner or an investor or a potential investor, that they have limiting beliefs, and that's okay. Everybody has limiting beliefs, either from their background or something that somebody told them or something that they experienced. And so for me, it was really understanding that you can break through those, but it's really important the people that you're spending your time with. And I know everybody says, you're the sum of the 5 people that you spend the most time with, but it is so true, because if I'm bringing you an idea, Dave, and you're in a different spectrum of thinking than I am, you're going to look at that and say, why would you ever do that? And to me, it might be the best idea in the world. And you have to realize that your circle that you're spending time with, your circle of influence or your sphere of influence, is extremely important on the way that you're going to act. And the other thing that I'll say, just I know I'm giving a lot of advice here, but the last piece that I'll say here is there's typically one thing that's really holding somebody back. And that could be their health. It could be finances. It could be one relationship. And I would say take 6, 8, 10, 12 months and go fix that one thing. Because I think that many people think, okay, well, I have all these bad things happening to me in my life, or I have all these things holding me back. It's not typically the case. It's usually you solve one that's really holding you back, and the other ones start to really open up. For example, maybe you're, feeling tired all the time. Well, maybe if you drop, 30, 40, 50 pounds, or you start sleeping, or you drink less alcohol, maybe that's going to impact your relationships and your, the way that you deal with your finances. And so try to find the biggest thing that's holding you back, solve that for 6 to 8 to 10, 12 months, whatever the time may take you, and then watch everything else kind of open up for you. I think that's a phenomenal piece of advice that really helped me. And I try to take my own medicine on a regular basis with.
Excellent. No, I think that's really great. One of the most powerful questions that was ever asked to me by Dan Sullivan was, what are your top 3 dangers, your top 3 opportunities, and your strengths you have to achieve those opportunities.
Absolutely.
So when you just really simplify it and you cut through the noise, you're 100% right. If you have a big danger that's in your life, focus on removing it. Don't let it really impede your progress. Move that away, focus on your opportunities, and use your strengths for those opportunities. And it's quite powerful.
Yeah, it's a quick mental model for folks. If you want to put this into effective at the applied level, it's the start, stop, continue mental model. So what do you need to start? What do you need to stop? And what do you need to continue? And I would venture to say you should start with what you should stop doing. And so many times people want to add certain things. I'm going to go read another book. I'm going to go to another, mastermind. I'm going to go do something else. Well, that's probably not the best advice. I think the best advice is, what do you need to stop doing? Well, maybe I need to stop watching 3 hours of Netflix every single night. Maybe I need to stop that. Maybe I need to stop sleeping 10 hours a day and really try to, sleep 8 hours a day, work out 1 hour a day, and read 1 hour a day. So,
Right.
I think the stop mentality is extremely important, but start, stop, continue really helped me just kind of put that into application.
Awesome. Logan, really appreciate you coming on the show today. I know you've provided a ton of value for listeners. Where can folks really reach out to you, connect, follow you?
Absolutely. Highly, focused on LinkedIn. So if anybody is on LinkedIn, you can find me, Logan Freeman, Mr. Kansas City. I post daily over there and try to get, what I'm reading and learning and working on in a really nice way. And so I've gained a lot of followers over there on that platform. Love that platform. Our website is ftwinvestmentsllc.com. A lot of the things that Dave and I talked about today. I write a weekly blog that goes out to our list, and that's got a lot of followers and a lot of people that look to that for investing advice as well. So those are the 2 places that people can reach out to me, Dave. I appreciate it.
Awesome. Yeah. Thanks for coming on, Logan. Really enjoyed the discussion, and look forward to continuing to collaborate.
Thank you. The pleasure was all mine today. I really appreciate you having me on.
Awesome.